Hi, this is Seth David for schoolofbookkeeping.com. Talking about how to clean up the books when a return has already been filed. We're going to show you how to use my updated trial balance adjustment template to do just that. Hi, this is Seth David for schoolofbookkeeping.com. That's schoolofbookkeeping.com. And we're going to show you how to take care of a very commonly needed task. And this is one of those commonly needed tasks that a lot of people aren't always aware it's needed, let alone commonly needed. So pay attention, stay tuned. Let's take a look and see what happens. And the typical scenario and where this is coming from is a case study we put in our Too Legit to Audit blog based on one of our students who came to me via email one Saturday morning at about 9 a.m. asking for help. The books he was working on in QuickBooks Online were a mess, and he was trying to clean them up. Mind you, the tax returns had already been filed for the year 2012. So he really just wanted a quick way to clean it up and get to the right starting point for 2012 rather than having to go back and change individual transactions. There's no point in putting in extensive time and work to cleaning up a period that's already been filed. In fact, the only thing really to do is to get to that clean starting point and then roll forward from there. So how do we do that? The first thing is to get the bank reconciliations done through year end, and the blog post, which will be linked, of course, from wherever you're watching this, walks through. It's very simple. You put in the ending balance, you reconcile to that December 31st, 2012 ending balance, and you double check what cleared in January that may have been posted prior to December 31st, whatever year you're working on. In this example, it was 2012. And you uncheck those so that you're left with a difference of only the things that have likely or almost certainly cleared prior to December 31. Once you have that, you post a journal entry, clear out the balance, and now you have the right starting bank balance. Of course, what you'll be doing at the same time is posting that difference to an equity account, as I suggest. If you let QuickBooks do the adjustment for you, QuickBooks wants to post it to an expense account, and usually they call it reconciling discrepancies. I have you post it to an equity account so that it doesn't impact the P&L, because it's based on the past and it's based on stuff that we don't really know what was wrong or why. And it doesn't matter, and here's why. Because the next step is what I'm about to show you here, which is where you're going to actually post a journal entry to force the books to agree with what's on the tax return. And here's how that's going to work. The first thing is, let's take a look at the template and start there. Bring it over from the other screen. You'll download this template from the school. That's available for students at schoolofbookkeeping.com. You'll start with this quick form, very simple. Just put in the name of the company and the date that we're adjusting. Come over to the trial balance here, and it's pretty simple from here. We're going to run a trial balance report in QuickBooks, export it, and paste it into this template. So let's see what that looks like. Going back over to QuickBooks, we want to go to Reports, and under All Reports, right here you'll have Trial Balance. Now, normally this would be a previous year, but since this is a demo company, I don't have a lot of data in the previous year, so I'm just going to run it for this year. But rest assured, in your case, you'll want to set these dates for the year that you're doing. So in the example I was describing, normally this would be January 1st, 2012 until December 31st, 2012. So once you have the right date range set, we're going to run the report, and then we're going to click here where it says Excel. That gets QuickBooks Online to run an Excel report for us. When you first open up the Excel file that you've downloaded, you're going to get this message here. Make sure you click Enable Editing, otherwise the copy and paste isn't going to work. You'll notice that the layout, and of course I planned for this, is exactly consistent with the template. So if we come back over here to the template, I have my account, I have my debit and credit column with no spaces in between. And the same thing is what happens here. So we're just going to highlight the whole range, okay, and exclude the totals. So back this up one, because the template's going to recalculate the totals for you. And we're going to press Control-C to copy. Let's come over here to the template. Very important here, don't just paste it in, only paste the values, right? So we can use this guy to just paste the values in, and you can see before you even click it that it's giving you a preview of what's about to happen when you do click. Click that in, and you'll see what happens. It drops the numbers in, and all of a sudden the debit and credit columns light up. Don't panic, I'll explain what that's all about in just a second. Let's come down to the bottom here. Now, mind you, this allows for up to 400. I had set it to 440 lines roughly, and probably in playing around with it, I've inserted a couple of lines. But now what we can do is we can do our own sum here, and let's just make sure that the font is set to white. Of course it is, so it'll show up properly. Equals sum, and this is where you're just going to double check that your totals from what you pasted in agree with what you had exported. Of course, they have to balance. They have to be the same, debits and credits on a trial balance. 40,713.52, 40,713.52. Always, always, always double and triple check your work. Now, once you've got this done, then what you'll want to do is, probably want to delete all these extra lines in here that you don't need. Okay, probably save it before you continue. Save as. $12.31.12, whatever it might be, just so that you don't sort of override your template. And now is actually the hard part, because so far everything has been really easy, but now we have to compare it to the tax return. So what the template does is once you drop your accounts and information in, it basically copies those accounts over to here. No rocket science here, just a formula set equal to what you pasted in. And what it does is it starts calculating what debits and credits are needed to get it to agree with what's on the right-hand side. So initially, with nothing on the right-hand side, it's going to want to zero everything out. So notice it takes a checking account balance and it credits it to zero it out. Of course, our job now is to go look at the tax return and start keying in the information. Now, the balance sheet part's easy because you have a balance sheet on your tax return, so you should be able to pick it up right off the tax return. Now, let me go to a sample tax return that I pulled up somewhere online. And here you're going to see is the 1120S, using an S corporation as an example. So you're going to go way past all this and right to the balance sheet. And here it is. And you can recognize the balance sheet pretty easily because it has all these kind of gray shaded in areas. Notice it has the assets, cash. So you're going to pick that up off of here. Assuming it agrees, then you'll simply put in the 1201. If I could type properly. And notice now the adjustment goes away because I've set it equal. And you're going to do the same thing with every single account down the list and make sure that, of course, you've accounted for everything. The way to do that is add up your debits and credits and make sure that they agree with what's here on the tax return as you're keying it in. Now, when it comes to the income and expenses, it's a little less easy. It's a little less straightforward in terms of how to get the information. What you can start with is that first page of the S Corp return over here. And over here you'll see the income, the ordinary income or loss from trade activities or business. You'll see gross receipts or sales here. So you'll want to start with this section here and you'll have officer salaries, right? Salaries and wages, less employment credits. So take what you can find, bad debts, rents, taxes, and licenses off of here. But that's not going to be the whole of it. And then what you'll want to do is find the equivalent account here in this section and key in the numbers for the income and expenses. Okay, you'll see pretty clearly where the income starts, where the balance sheet ends and the income begins. And when I'm actually doing one of these, what I'll often do is I'll just put a bold line right in between, kind of where the balance sheet ends and the income statement begins. So here's the end of the equity section. Then we have design income. So what I might do is right here put a thick line underneath it, thick bottom border, just so it kind of clearly sections it off. And now I see, okay, here's my income. So my income, I want to start putting in credits to make sure it agrees. And once I've gotten what I believe I can get out of here, then I have to go to the schedules because the tax return takes a lot of information off of the profit and loss that they get from QuickBooks. And they prepare schedules and they total things up, and then those totals flow over to different parts of the tax return. But if you look carefully, you'll see that all those schedules explaining how they got to those numbers are all laid out pretty clearly in the tax return. So you're going to be looking for schedules. This is an example from a school, I think, so you have other pages in here. But I'm going down because I saw the schedules in here when I looked. Here it is. So here's an example of what the schedules might look like. So you'll have Schedule 3, Schedule 2, Schedule 4, and so on. And those schedules will be referenced. So where there's a line item total on the tax return, that's made up of several numbers, there'll be a reference to the schedule number, and you're going to just scroll down in the tax return, or if you have it printed, flip through the pages and find those schedules, and you'll be able to pick up from those schedules and compare with the equivalent line item from QuickBooks so that you can key it in. So it is a little bit of work, but what you will be left with at the end of the day is exactly what needs to be debited and credited in order to get your books to agree 110% with the tax return. Then, because we took these accounts from QuickBooks, the adjustment in QuickBooks is a simple copy and paste. So when I'm ready to copy book the journal entry, and if I'm booking an entry that changes the landscape services, job materials, sprinklers, and drip systems, I can go into my QuickBooks file, and I can go over here, and I want to post a journal entry. There it is, journal entry. And I can paste my account right in from the Excel template. Now this one is not going to have that account because actually it is. If I hit tab, it recognizes it because I exported it from the same company file. See how that works? And then if I'm actually debiting it $30 because I determined that that expense wasn't on the tax return for some reason, then boom, it's just Alt-Tab, Control-C to copy, Control-V to paste after another Alt-Tab. So that makes the process of posting the journal entry very easy as well. And that, my friends, is how you can use this template to save yourself hours and hours of time after you set up that bank rec so that you've reconciled to the right ending balance. Then you're going to post this entry. Now what's going to happen is, as I mentioned, when you're cleaning up that bank balance, I'm going to have you create an equity account to post that offset to. When it comes to posting this entry, that offset obviously doesn't exist on the tax return. So you're going to end up zeroing it out. And whatever the difference is, it's going to get flushed out. And ultimately, and the most important thing is, the retained earnings is going to agree to the tax return. And the way it's going to agree is when you're finished posting everything else, you're going to be left with a plug basically that's going to go to retained earnings. And since everything else now agrees 100% to the tax return, the only thing that can possibly be off that remains would be retained earnings itself. So any plug that you're going to end up putting in to force retained earnings to agree is going to force the books, even in terms of the retained earnings, to agree exactly to the tax return. So you'll be left with a set of books that, as of, in this example, December 31st, 2012, exactly agrees to the tax return. And then from January 1 forward, you can enter and reconcile your transactions, and as long as you keep doing things right going forward, everything should stay in perfect balance. And that's my story, and I'm sticking to it. So if you're already a member of schoolofbookkeeping.com and you're watching this, go on over to the Excel templates section. If you have trouble finding it, let us know, because as of the time I'm recording this, we haven't actually added it into the navigation yet. I'm going to find a way to do that that's cohesive. And download the template and get started. Use this video as your guide and reach out to me if you have any questions. If you're not a member of schoolofbookkeeping.com, then I encourage you to sign up. For a mere $14, you can try us out for a month, and you can download this template and start getting to work with it. As always, I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.